Supermicro stock plummets as Q1 earnings revenue falls short of Wall Street estimates. Hello, investors, and welcome to the channel. In this video, I'm going to be talking about none other than SMCI stock, that's Supermicro Computer stock. They had earnings yesterday and they missed by a wide margin, so I'm going to highlight a few points on their earnings, and then I will jump over to the chart and see if we can figure out where this is going in the near term. So the stock dropped 11.5% today, and that follows being down on Tuesday and Monday. So in just this week, the stock has dropped over 20%. The company reported revenue just over $5 billion, and that was down from $5.94 billion a year ago. So their revenue has not grown; it's went down. And then that was less than the 6.09 billion they were expected. So they missed their estimates by over $1 billion. That's yeah, that's not great. Their earnings per share were 35. They missed by 6 cents. They were projected at 41. This is an increase from the 7 cents they made in the comparable quarter last year. Now, an interesting thing down here I want to point out in this article was Tuesday's report marked the sixth consecutive quarter that Supermicro's earnings and revenue have fallen short of analysts' estimates. So next time this company reports earnings, let's all remember to steer clear. One last thing before we go over to the chart is that they did increase their full year sales forecast to 36 from 33 billion. So they are expecting growth with these NVIDIA servers and the demand for AI. So that is probably the one bright light in this entire report. Okay, we're over here in the chart to take a look at what's going on. And this is not a wonderful looking chart for me. The stock basically since February really has just went up and down in a pretty wide range. It went up to 60, then collapsed to 30, then ran up to 60 again and collapsed to 40 on the second run, and now it ran up again, not quite to 60, close enough, and now it's collapsing again. So without even drawing any technical analysis, if this follows the same old pattern, we're heading down below 40, I should say somewhere between 40 and $30 in this stock is very, very likely. Now, as far as support, we have a little support right here at this close to $40 level, which I think will hit this week. It may bounce up a little bit since it's been down 20%. You might get a little bit of a relief rally tomorrow, but I think Friday, we have a good chance of bouncing down and touching that $40 area. Below that, you have a little support way over here in this congested area, which is, again, your $30 level. If I zoom out a little bit, that sort of coincides with this congestion over here from earlier in the year. The stock has broken all its major moving averages. It's below the 20, below the 50, it even broke the 100-day moving average. And all these are turning downward, indicating that this stock is in a clear downtrend. And the pressure, unless there's news or something significant, the pressure on the stock is going to be down. And I definitely think that the rest of November will not be kind to this stock. And I do expect it eventually to get down somewhere between $30 and $40. How low it goes is yet to be seen, but I definitely think that's where we're headed. So for me, this stock is a sell. I would not hold on to my position, and I would not look to enter a position until it establishes some kind of base and upward trend, or at least breaks that downward trend and starts to consolidate a little bit. So for now, my recommendation is we all stay away from this one. Good luck out there.